Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared disclaimer and be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show is for informational purposes only concerning Market Chameleon tools and products. And with that, Dee, good morning.
Good morning, Will. How are you?
Good.
Let me share my screen here, and good morning, everyone. If you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's keeping an eye on it. He'll let me know and read it back to me. And to give you a couple minutes to put those questions in, we're going to take a look at our pre-market report, see what type of insights we could get in the pre-market trading, and then we will move on to our questions. So let's start out over here, pre-market report. Here you will see a calendar view up top with summary statistics, what happened in the pre-market hours on those dates. The idea there is you could compare today's trading activity to the most recent history, see if you spot anything unusual or a trend. Let's review today's activity. That will be August 8th over here. And as you can see, we have 646 stocks trading higher in the pre-market, 255 stocks trading lower. We have 287 million shares trading on up volume, 72 million shares trading on down volume. We have $6.8 billion worth of stock trading higher and $847 million worth of stock trading lower. And from that perspective, it appears that so far trading in the pre-market hours has a bullish lean. Let's take a look at it from a couple more angles, and then we will move on to our questions. So let's come down here. And now we get this more granular view of what's going on in pre-market hours. We have the stock symbols, price and price changes and volume. And we also see our most active list, our biggest percentage gainers and biggest percentage decliners in the pre-market. And down here, I see 228 stocks made it onto our biggest percentage gainers list, 57 on our largest decliners. And that also indicates that there's a bullish bias in the pre-market trading. Now, to make it onto this list, we set certain thresholds because the stocks in the pre-market hours can have very low volume, low liquidity. And if it meets our thresholds, it can make it onto this list, and that could include small cap stocks. It could include an ETF, could include a closed-end fund. It could be a leveraged ETF or even an inverse ETF that goes in the opposite direction of its underlying. So to narrow down this group of stocks further, we could use our filters above. And here's this first filter. It's in my watch list, and what makes it unique is that if you save a watch list with your own group of stocks that you like to analyze and follow, you could use that filter to screen this report by your watch list. We're going to use this next filter in ETF, for example, which is a similar concept, except it uses ETF holdings as a substitute. So let's take a look at how that works. If I click on it, you get these different ETFs to select from. Let's choose the first one, SPY ETF. So when I do that, you will see that the list below gets filtered by stocks that are holdings in the SPY ETF. So pretending like if you had a watch list with S&P 500 stocks, right? SPY holdings are the S&P 500 companies. So what we did was narrow down our analysis to the group of stocks that belong to the S&P 500. And here we could see that 35 stocks made it onto our biggest percentage gainers list, 3 on our biggest decliners. So from that perspective, it looks like there's also a positive lean in the pre-market hours. We looked at it from a couple different perspectives, Will. So I think at this point, I'll take questions if you have some.
Nothing has popped up yet, D. Though Rob mentioned gave everyone a pre-market watch. I don't know if everyone showed it. I pinned the number of Americans who applied for unemployment benefits last week sank receded from a 1-year high, signaling layoffs remain quite low. I know that was one of the drivers people were talking about, the uptick last week. So thanks for the information, Rob.
All right. Yep. Thank you. Let's take a look at, let me see
Can
if
I
I
share
can,
my screen real quick?
sure.
So what are we going to look at?
Yeah, let me grab that screen back. Well,
All yours.
so let me take a look at, let's look at this multi-leg trade screener.
So we're looking at the
Multi
multi-legs trade screen.
option trade screener. And what the idea behind this screener here is that there are lots of trades in the options that are multi-leg or contingent trades, meaning like when they're entered into the market, it's entered in as a complex order. You enter in not just buy a call or put, but buy this and sell this, or you could have multi-legs, but you need to get them executed simultaneously, right? Or you don't want to leg into a strategy. You have a strategy, but you want to make sure that all the conditions of the strategy are executed simultaneously, like price bottom, whatever it is. So, in all the legs. So when you do that, when you enter in and it gets executed, it gets reported like a multi-leg trade. Okay. I'll give you an example here. If we go to the option block trade screener. So these are big, these are just trades that are reported on the OPRA feed, the option price and reporting authority, right? They report all the trades that are happening on different exchanges. So you could see here QQQ, here's the option, we have the volume, price, and so forth. We have the exchange, and then we have the condition. So you could see here there's auto execution, but when it's a multi-leg, it will get tagged as a multi-leg. So the problem though is that, okay, we have this multi-leg. So we know that this IWM is part of a multi-leg trade, 2000, but we have to find what are the other legs that are part of this trade. And the issue is that the overtape doesn't actually give you that. This is all the information they give you, what we're looking at. So you'd have to sit there and really manually figure out, well, there's one multi-leg trade. Is there any other multi-leg trade around that time on the same exchange? And if there is, what do you think happened? What is the most likely scenario that happened given these different legs that I could detect? All right. So I have to find this one, then I have to find, oh, there's another one at this time on the Amex. Are there any other ones? Well, maybe these are the ones that are related. And then you have to try to interpret what the strategy is. So that's because you lack you don't lack the other information. They don't produce, they don't tell you, here's a call spread that traded, here's a put spread, here's a butterfly. They don't tell you that. So you'd have to perform an analysis, right? That's the next best thing. Well, if I don't know the information, what information do I have, and can I come up with the most likely conclusion of what happened? All right. Well, if you're doing that manually, of course, it's going to be impossible to go through, millions of trades per day and figure all this out. And even by the time you figure out one trade, doing it manually, believe me, because I've done this, it would take you a very, long time. So what we do is create, software to help us out with that, right? The software scans it, compiles the data, organizes it, and runs through a bunch of analysis to come up with, like, this is what we think. This, based on the data, surrounding data, this is what we think the strategy was, the most likely strategy. All right. Now we have all these strategies that our software help interpret, make inferences. And then, well, what do we do with them? Well, let's first organize them and list them on a screen. All right. Let's see what happened. Right. Because it's not obvious from here what happened. I'm just looking at bunches of different trades here. So yes, they're here, but if I tab through them, it's very, it's going to be overwhelming. And to do it by hand, it's also overwhelming. So now we have our software to assist us with it and screen out just the multi-leg trades. That's what we're looking at. We just want to look at the complex multi-leg trades and what do we think happened. So let's go to our screeners here. We're going to look at multi-leg trade screeners. These are analyzing actual trades. And then now we have them listed out here, 5,418. And these are sorted by contract, by the highest volume, by contracts. So that's what it's looking at, strategies, and then saying, organize them, and then let's sort them by the biggest, volume of contracts. So here, and then we have ways to screen out certain things that we want. So let's just see the top 5. So these are the top 5 from yesterday, right? Out of 540, you could expand it, you could tab through the other ones or filter, but let's just examine what happened in the top 5 multi-leg strategies. And what we see here is the top one was IWM. That's the Russell 2000 index, ETF, sorry, Russell 2000 ETF. And now we have these details regarding what happened in this particular strategy. So we see from 957.20 to 236.09. So the first trade we caught was 957.20. The last one was 236.09. And we see that what was the strategy? It was a put spread. And this put spread involved the September 20th expiration with the 194, 197 put strikes. That's what this was. The September 20th, 197, 194 put. And the total contracts involved was 186,002 contracts. And this particular put spread traded 23 different times throughout the day. So it's not just one trade, one time. This particular put spread, we detected it 23 different times throughout the day.
AD?
Yeah.
I apologize. I didn't pick it up right away, but I'm reading through the Rob was asking you, could you describe the clicks to get to this actual multi-leg options trade screener?
I believe you guys have access. If not, let me know. I believe I pushed it out. It's under screeners, multi-leg trade screener.
All right, let us know, Rob, if you have it. We're interested in that.
If not, let me know. I thought that I always use my internal website, so you might see things on my version that you're not seeing on your version because I do lots of testing of new features and so forth. So if you don't see it, let me know. I thought we pushed this out though. If not, let me know. So now, so now we see this put spread. in IWM, September 194, 197. And, we have a couple more details here just to, you could figure this out in your head, but just to make it easier, September 20th, how many days left to expiration? 44, right? It's because if you're scanning through a lot of them with your eyes, it's just easier. We know it's a put spread. It's $3 put spread, so we listed here. Again, this to the right is just to make it easier to scan with your eyes instead of, thinking in your head, oh, August, expiration, September, because you could have lots of them in there. How many days? What for? What are the strikes apart? 3. I'm going to skip these indicators for now. I don't think we'll have time. So let me just go through the rest of this. It traded 23 different times, probably different. Could open this up, but if you open this up, you're going to get more details. These are the trades over here. So you could see here, 957, a bunch of them traded. Then 104.52, 96,000 contracts traded, 236.09, 2 contracts traded. So here, there are 23 different times. We could tap through it if we wanted to, but let's just stay on here. Let me see if I could expand it. So there they are. See 957.20. And if we just looked at it, you could see that 957.20, look what we see. 45,456 contracts, 6,364, 6,000. And they're on different exchanges, Box, MS, So what this tells us is that, what can we infer? We can infer that there's a big spread order entered and had to access liquidity on multiple exchanges to get filled, right? Because you can see it all didn't happen on one exchange. It happened on multiple exchanges very quickly. So you could see that the time apart is, it's not that, it's probably milliseconds, because it's all happened in the same second. So we could infer that there's a big order for a put spread at 957.20, and it looks like it got filled on multiple exchanges, had to access liquidity on multiple exchanges. Here's all these exchanges. If we looked at it just from the perspective of what do we think may have happened from the side of like, where was the incoming order, right? Because if we see where the dealers were, where are the dealers, right? Where are the dealer quotes? Well, these are the bids and offers, 65 cents, 71 cents. So that looks like that's where the dealers were quoting at the time. Where did it get executed? Well, we could see 71 cents, 70 cents. So this one was right on the dealer's quote, some of them very close. So we could infer, right? From this data, that it appears that an order came in to buy a put spread, right? That it got filled either on the dealer's ask, or the dealer is willing to sell it, or close to the ask. That's where all these are. So from 957.20 to 957.21, that's what it looks like. See, this got filled at 70 cents, but the dealer quotes 64 cents, 71 cents. So very close to where the dealer was where the dealer was willing to sell it. Some of them were 71 cents, and that's exactly where the dealer was offering, or the dealers. So that's, one inference. And we see that the stock was around 207, between 207.63 and 207.75. So then there was a wide gap from 957. The next trade happened at 104.52. And here, so a lot of time passed, right? It wasn't like every half hour or every 20 minutes or 15 minutes. A lot of time passed. And then lo and behold, we have another trade here. Same spread. This time, 96,000 contracts were involved. They traded for 83 cents. And if we compare that to the dealer quote at the time, 80, which was 82 cents, 93 cents, it looks like we're inferring that somebody came in to sell it because it was closer to where the dealers were willing to buy. And we could see, look how much the stock dropped, right? From the morning, from 957.20, the stock went from 207, like, let's say around 60, 70 cents. And at 104.52, the stock was at 203.80. And it looks like perhaps, remember, we're just inferring from the data we're seeing. We're trying to come up with the most logical conclusion that perhaps this was a day trade, day flip, right? You bought in the morning now, you might be taking that profit later on. We don't know for sure, but we'd have to go look at the open interest and stuff. But let's just say, given this information, we're making a note of this looks like maybe that's what happened. And this one actually at 104.52 got executed all at one on one trade, right? It wasn't split up on the ISC. So it looks different than from the morning. He was able to access liquidity all at one time. You can see over here at 96,000 on the ICE. So that's kind of like the picture, I think, of what went on. Let's see if we could get I'm going to open this up. And this is where the option spread went out 91 cents 101. So it did go higher. And here is the open interest on the day. There's a decrease of 19,000 on the 194 put, an increase of 49,000 on the 197 put. So it's not very clear right now. And there's other trades going on in those puts, I'm sure, that involved, those legs, not part of this spread. So it's not really conclusive here, what it may have happened.
Hey, D,
Yeah.
we just heard back from Rob. He does not have it. So he's like,
Okay.
looks
All
super
right.
helpful. Please push
Yeah,
out as soon as possible.
let me make a note of it. I thought we did push it out. Let me just make a note of it that the yeah. Okay. So now that we analyze it, perhaps this looks like a intraday flip. That's what it perhaps looks like. This did trade historically, besides yesterday, 3 other times. This is what this tab says. So if I click on it, you could see here on May 3rd, there were only 2 contracts involved, July 16th to in August. So it's not something that, although it traded historically 3 other previous dates, this looked different because of the size of the contracts or the quantity of the contracts. And these other ones may not even be connected to the same trader or whatever, because they're very small. It's just coincidence, because IWM also has a lot of trades. So you might see the same spread just repeat by chance. But that's what this is showing us, that we detected 3 other dates that this particular put spread trade. I'm going to go back to the current. I'm going to close this out. And that was an analysis of the IWM, right? Here, the next one's Apple. This traded 128,560 contracts. You can see it's also a put spread. August 16th, 110, 120 put. 9 days to expiration. Strikes are $10 apart. And here, this had a lot more trades. This traded 1,837 separate times. So it traded a lot in between 935.20 to 355. You know, could open that up. It also, let me see what actually, let me see this. So this is really a out of the money put spread actually. So the 110, 120, where's Apple price that? So this is like deep out of the money. It looks like Apple's 210. So this could be just what's our interpretation? It might be somebody just closing that has them. You know, let me see the open interest. So, but this is way deep out of the money. You can see that it traded for a penny. So that's, that's that next Apple. So, well, we are right up next to 9:30. I'm going to stop there. If there are
All
no
right.
other.
Perfect, D. So we'll get that multi-leg trade pushed out. I'll remind you later, D, when we talk. Thanks for letting us know, Ron. Thanks for all the question. Great job, Dima.
Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.